Hello, I'm Jeffrey Ham, equity analyst for Briefing.com. Today is Wednesday, April 9th. The stock market opened the day in near neutral territory but succumbed to selling pressure early on. The negative sentiment persisted throughout the session, but stocks were able to close off their lows. Initial support came in response to a report from the Wall Street Journal that Citigroup is close to selling $12 billion in leveraged loans and bonds to a group of private equity players. The loans and bonds were initially issued to help finance business during the leveraged buyout boom. Shares of Citigroup opened noticeably higher but lost buying interest as the session progressed. Regulatory filings from Lehman Brothers and Goldman Sachs that indicated their Level 3 assets totaled $42.5 billion and $82.3 billion, respectively, counterbalanced Citi's news. Given the illiquidity of such assets, market participants sent shares of the two investment banks lower out of concern the firms could potentially face more write-downs. Financials overall finished the day as a laggard. The sector slipped 1.8%. Shares of UPS, otherwise United Parcel Service, were also sent lower Wednesday. The company announced it expects its first quarter earnings to range from 86 to 87 cents per share, which is below the consensus estimate of 93 cents per share. Boeing was the primary leader in the S&P 500. Despite further delivery delays for the company's 787 Dreamliner, no orders were canceled. The company also stood by its 2008 earnings per share guidance, and shares advanced as a result. The Department of Energy reported that oil inventories for the week ending April 5th declined 3.1 million barrels. On average, a build of 2.3 million barrels was expected. Oil hit a new all-time intraday high of $112.21 per barrel. The commodity was able to keep a large portion of its gains, finishing the day roughly 2% higher. Oil closed at $110.93 per barrel on the NYMEX, marking a new all-time closing high. I'm Jeffrey Ham for Briefing.com, and thanks for listening.